ITR filing deadline extended. What taxpayers need to know and what's new this year. Hi, my name is Sneha Biswas and you're watching the Free Press Journal. Filing income tax returns ITRs for the assessment year 2025 to 2026 will look a little different. The Central Board of Direct Taxes has rolled out 7 updated ITR forms, introduced a new form ITR-U and extended the filing deadline. Here's everything you need to know in this easy explainer. The last date to file income tax returns has been extended from July 31 to September 15, 2025. According to the CBDT, the extension comes after feedback from taxpayers and stakeholders. More time was needed to update systems, test software tools and give everyone a smoother filing experience. Even though the updated forms are out, taxpayers still can't file online because the e-filing tools aren't ready yet. So while you can download the forms, online filing will begin only once the software tools are launched. Now let me tell you about the new form ITR-U. A new form called ITR-U has been launched. Introduced under the Finance Act 2025, this form allows taxpayers to revise or file late returns for up to 48 months. You can use ITR-U to update returns for the following assessment years: 2021 to 2022, 2022 to 2023, 2023 to 2024 and 2024 to 2025. Now let me tell you about the key rules for ITR-U. It cannot be used to claim a refund, cannot be used to reduce income already declared, cannot be used to carry forward losses, cannot be filed if a Section 148A notice has been issued beyond 36 months, unless the assessing officer says reassessment isn't needed. Many salaried taxpayers typically wait for Form 16, which is issued by employers by June 15. With the earlier deadline, that was July 31, they had less than 45 days to file their returns. Now with the new September 15, 2025 deadline, taxpayers will have more time to gather documents, check TDS credits, use the revised ITR forms, file returns accurately using the new system. Every year ITR filing begins in April once forms and e-filing tools are released. In 2024, 7 ITR forms were issued by early April and filing started smoothly. But this year, the process has been delayed. ITR forms were released almost a month late. E-filing utilities are still pending. Forms have undergone major structural and content changes. The Income Tax Department admitted that more time is needed for systems to adapt, which is why the deadline has been extended. The CBDT said this move is meant to simplify the return filing process, improve transparency, ensure accurate reporting. LTCG exemption limit increased. For listed shares and equity mutual funds, the exemption limit for long-term capital gains LTCG is now 1.25 lakh rupees up to rupees 1 lakh. Taxpayers with LTCG up to rupees 1.25 lakh, no capital loss to carry forward, can now use simpler forms like ITR-1 or ITR-4 instead of ITR-2 or ITR-3. Due to tax changes in Budget 2024, gains must be reported separately before July 23, 2024 from July 23, 2024 onwards. This ensures correct tax rates are applied. Buyback of shares. Tax rule changed from October 1, 2024. Companies will not pay tax on share buybacks. Instead, investors must report buyback income as other income. Show capital loss, if any, separately. Let us move on to forms. ITR-5 and ITR-6 have been updated. ITR-5 only allows genuine buyback losses where dividend tax is paid. ITR-6 now includes new sections for cruise operations, diamond profits and capital gains. If you earn income from business or profession, you must now report. how many days it took to pay micro, small and medium enterprises. This move promotes transparency and timely payment to small businesses. Asset and liability reporting limit increase. The limit for reporting assets and liabilities under the AL schedule has been raised from 5 million rupees to 10 million rupees. Even if you're below the limit, keeping clear records of your assets, debts and yearly changes is still recommended for financial planning. Tax experts advise salaried taxpayers to wait until June 15, 2025 before filing returns. I will tell you why. Form 16 issued by your employer is essential. It includes salary details, tax deductions and income summary. Employers usually issue Form 16 by June 15, so filing earlier may lead to errors or missed claims. Also, the e-filing utilities are not available yet, as I mentioned earlier, so waiting ensures you have all documents and tools ready. Now, whatever I have mentioned, let me just summarize everything. What you need to do. Wait until June 15 if you are salaried. Use the correct ITR form. New options may apply. Watch for launch of e-filing utilities. Keep records for MSME payments and asset declarations. Use ITR-U if you need to revise or file older returns. If you don't file your ITR by September 15, 2025, you can still file a belated return by December 31, 2025. But a penalty of up to Rs 5,000 may be imposed. Also, if you need to make changes to a filed return, you can file a revised return by the same date. For major corrections, or if you miss filing altogether, the ITR-U updated return can be filed by March 31, 2026. Now, what's your take on this extension? Is it a helpful move or overdue fix? Tell us in the comments below and like, share and subscribe for more updates and explainers for India's financial rules and other related stories. That's it for now. I'll see you in the next video. Thank you.